Nariman Behravesh, you're chief economist at IHS. We're here at the World Economic Forum in Davos. Stock markets are falling worldwide, and business leaders here in Davos doesn't seem to care too much. Is that impression totally wrong?
Well, I think business leaders here in Davos are worried, but they're not panicked, I guess is the way to say it. Because at some fundamental level, they see their own businesses. They see, especially the American and the European ones, they are confident that growth is okay, not great, but okay. And so in that sense, they're not panicked, although there is this sort of anxiety about, why are markets behaving like this, almost irrationally. And I think part of the answer is investors seem to have lost confidence in policymakers, in central banks, the Fed, ECB, so on, and very importantly in the Chinese policymakers. So I think there is this sense that maybe China has sort of lost control a little bit of its economy. So it's that lack of confidence in policymakers that seems to be at the heart of this financial volatility.
You mentioned it, China is the main topic here in the World Economic Annual Meeting here in Davos. We had, these growth rates in China. We had 10%. Now it's down to 6.9%. Do we actually? Can you actually believe in these official figures, growth figures?
Well, I think our concern is the answer is no. You can't really believe in these official figures. I think one way I would characterize the situation in China is you got this sort of nasty cocktail, if you will. Structural problems, huge amounts of debt, vast amounts of excess capacity, slowing growth. We can debate about how slow, but it is slowing. Everybody knows that. And then separately, this very chaotic policy response to the falling stock market and also to currency pressures. And the big worry these days about China is, will China let its currency fall a big amount, not just these small amounts we've seen recently? That, I think, has a lot of people worried.
What kind of impact does what kind of impact does the massive capital outflow from China has? I mean, this also depreciates the Chinese currency.
Indeed, one of the biggest worries these days, short-term worries about China, is this massive capital outflow, about $1 trillion since the summer of 2015. That's huge. Now, there are three things that the Chinese government can do to offset this. Well, first, it could let the currency go, but it's not going to do that, so that's very unlikely. Second, it can start to use up its reserves to offset this capital outflow, and that's exactly what it's done. The third is to tighten, once again, capital controls. It had loosened capital controls as part of its financial reform. I think it will probably tighten them again, either explicitly or implicitly, in other words, informally. So I think that's what's going on at this point. So we will see more actions, but that's one of the big concerns that a lot of investors have, is exactly how is the government in China going to handle this massive outflow, which is likely to continue for some time.
So another concern in the markets is the falling oil price. How deep can the oil price fall, as low as a certain level? What do you think?
I think there's certainly more downside to oil prices, there's no question, but a lot of it has to do with supply more than demand, and has to do with geopolitics in the Middle East. Clearly, the Saudis are not willing to give up market share, so they've actually increased production. The Iranians are coming on stream here in terms of production. U.S. production hasn't fallen that much. So all this means is there's a huge glut, if you will, of oil supply, and that's pushing prices down. How low could prices go? They could go to 20 for a while. It's possible. But if they do, I suspect it will reduce production in somewhere or other, probably the U.S., and that will eventually equilibrate the market. So our view is by the end of this year, we could be back up over 30, 35 maybe. But it could go as low as 20.
So we had this interest rate hike in the U.S. In mid-December. It's a little striking that the markets have been falling since that. Do you think this is also has an influence on the markets these days?
It might. I think in retrospect, a lot of investors think the Fed made a mistake in raising rates. Now, they didn't know that. In December, things were fairly stable. But as you look back, you say, wow, things are fairly fragile. I don't think the Fed interest rate increase caused this problem. I think there were other factors in place. But now the expectation is the Fed will move very, very slowly in terms of the next interest rate hike. Probably the earliest that would raise rates again would be June. and maybe they'll only do it once or twice this year. So it'll be very modest. I don't think these rate hikes, even let's say that 2 more, are going to really do damage to the global economy or the U.S. economy.
So the recent market turmoils don't have an effect on the Fed decisions, you think?
They might. Actually, what they probably will do is they will delay the next rate hike. I mean, that happened in August, September. If you remember, the market turmoil in the summer delayed that hike. Initially, we thought the Fed was going to raise rates in September, but they waited till December. Same thing this time. For a while, people thought, well, the next rate hike by the Fed is going to be March. Now I think it's probably going to be more like June before they do it.
So coming back to the stock markets, do you think the markets are overshooting or have overdone in the dip?
I think the markets have overreacted to what's going on because the fundamentals, especially in the U.S. and in Europe, and even in China, you could say, even though China's got problems, but even the fundamentals there aren't horrible. So it's hard to understand why markets are being so pessimistic.
So how far can markets fall? How far can they go down?
Well, we know about financial markets. They typically overreact, both on the upside and the downside. So markets could go down another 10% easily before they come back. But I think they will come back.
So there's 2 saying in the market, sell the rally or buy the dip. What would you do now?
I would wait. I wouldn't panic, but I would definitely wait.
Mr. Behravesh, thanks so much for your time.
Thank you.